Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. I think the foundation of any portfolio is a handful of stocks that you can just set it and forget it for the next decade or two. Three that I think are buy and hold forever are Apple, Disney, and Verizon. So why do I like these companies? That's what I want to get into today in this video. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content and check out my newsletter, Asymmetric Investing, below. I'm doing deep dives on really great companies there, so I think you'll enjoy that. Back to our buy and hold forever stocks. I want to take these one by one, and I want to start with Apple. Apple is one of these companies that over the last 10 years has really built a position in the tech market that just seems unassailable at this point. The iPhone has become a must-have device for the people who own one, and it's in a duopoly with Android. Very different strategies that they have going on, but it's very clear that Apple has built a market where they're extracting a majority of the value in the smartphone market. They have not only high margin sales for hardware, they also have high margin sales for software and a number of ancillary devices like AirPods, Apple Watch, and now even a VR headset. Financially, the proof is in the pudding. You can see in this chart right here, revenue just continues to surge higher and higher year after year. This isn't going to be a company that's growing 100% like it was 15 or 20 years ago, but it's an extremely profitable company. And even at a price to earnings ratio of 31, I think it's a reasonable stock to just buy and hold long term. From what we know right now, there's no new technology or hardware that's coming that's really going to displace the computer that is in most people's pockets every day. I could see 10, 20 years from now, the iPhone still being one of the key tech products in the world. And Apple is going to be churning out profits in the meantime, buying back stock, paying out dividends. And that's going to be a huge win for investors who just buy and hold. So that's why I think this is the kind of stock that you can still just buy and hold forever. Disney is in a little bit different position. Disney is going through a major transition from relying on the cable bundle for a vast majority of its profits to trying to transition to being a streaming company. Now, it has the second biggest audience in the world behind Netflix, so definitely has a lead over some of its smaller competitors in streaming, but there's a lot of turmoil to get to whatever end state we end at in streaming. And that's what we're going through right now. You can see from this chart that shares are actually trading at over 40 times earnings. That seems extremely high. But you can also see that revenue continues to climb. We have not seen the full impact from a year of full travel at both resorts and then cruise lines. And the streaming business continues to be a drag on the bottom line, but I think that will change relatively quickly as Disney introduces price increases, advertising, and even bundles its apps together. Remember that Disney Plus, Hulu, and ESPN Plus are all going to be in one app over the next year or so. I think there's an opportunity to grow revenue in a number of different ways for Disney. And a decade from now, I just don't see a point where this isn't going to be one of the clear winners in streaming. It's going to be a bumpy ride, but in the media business, scale continues to win. And I think Disney is going to be the kind of company that maintains scale better than a lot of its competitors as we move to this streaming world. Now, Verizon out of these three stocks is really the value stock. You can see that the price to earnings ratio for Verizon is in single digits. Revenue isn't growing like it is at Apple or Disney, but long term, I still like strategically where the company is positioned. It's in an oligopoly market. There's basically only three major competitors for telecommunications in the US. That means that there's only going to be so much pricing pressure. Verizon's churning out profits and dividends year after year. And we've just gone through a huge investment phase where Verizon spent tens of billions of dollars both buying spectrum and then also building out its 5G network. It's not going to need to make that kind of investment again in the near future. So I think we're going to see profits just continue to increase. And in a world where more devices are connected wirelessly, I think there's a lot of growth opportunities. Not only do we have devices like iPhones and cars and smartwatches that are going to be connected more and more to networks like Verizon's, but also there's the opportunity to grow in home broadband. Until 5G was released, home wireless broadband wasn't really a market that Verizon was pursuing. But this gives the company the opportunity to compete with cable broadband and even fiber in some locations by providing high-speed wireless internet into your home. That could create a new bundle and a new growth opportunity for Verizon. So I think this is the kind of business that isn't going to be sexy, but it's going to churn out profits year after year. That's why I like Verizon long term as just a set it and forget it stock. So the companies that I think you can buy and hold forever, three that I own are Apple, Disney, and Verizon. What do you think about those three stocks? I'd love to hear your comments in the comment section below. Don't forget to follow Asymmetric Investing. Thanks for watching, everybody. See you here next time.